coughing yesterday. If it starts up again today, I'll kill YouTube. Those poor people. You guys I know and love, you can listen to me cough. Guys, this is an educational room. And we don't call trades. We're not in that business. We're not licensed for it. What we will do is teach you how to read indicators, teach you how to recognize advantages, teach you how to enter and exit, but you have to make those good decisions. Today is Wednesday, January 14th. There was some news at 8:30 a.m. I don't know that it did much. I think that the consensus in the room was that there wasn't a huge impact, but there certainly could have been. And because there could have been, hey, good morning, Sergio. I feel like I'm doing much better. I've got to get better. I got to go play golf with John on Saturday. That's my whole reason for wanting to be better. That's not true. I don't like feeling bad. I'm the biggest wuss ever. Guys, at 10:30 a.m. we do have crude oil inventories. That can shake up crude oil a little bit. I haven't seen a whole lot of crude oil trades in here lately. But at 10:30 a.m. they're going to release the barrel counts, the reserves. And a lot of times there's a pretty good reaction. And sometimes leading up to it, there's like a lot of just calm, like doing nothing. It's almost like they're jockeying for position to set up. So knowing where news is, guys, what it does is it gives us the ability to sidestep the emotional response that can come out of the market. I'm going to go through my slideshow. We're going to have a good time. We have tankers full of reserve. Yeah, we do, Ron. America. I'm going to skip this one because I just told you we're going to read. We're going to learn to recognize advantages. This is the picture. If you've spent any time in the market, any time watching the markets go up and down, if you understand what a trend is, when the market is going up or when the market is going down, there's almost always a small fight or multiple small fights in the middle of the trend. The trend trade methodology that we're going to cover this morning on both NinjaTrader and TradingView are going to pinpoint where those little fights are most likely to be lost. And there's a great example of crude oil this morning. When the trend is up, that little sprout of a tail on a big chart, that's your fight. That circle is exactly what you guys are going to learn this morning. That circle is the high probability trend trade entry. It's a trade that typically wins 70 to 80% of the time. And when you learn this methodology, you're going to understand where the market is likely to continue. That's that fight spot, continuing with the trend. You will understand where the market is likely to go using momentum, key Fibonacci areas. And then at the same time, you'll know that that big red line has the capability and the potential to stop a market, to kill your trend, to create a giant reaction the other way, change the trend, and now they're in the middle of the fight again, guys. So that's kind of what the morning is. We're going to learn the easy trades. We're going to focus on the best trades, the highest probability trades, the trades that you can prove win more than they lose. And what you're going to find is that you really don't need more. But I don't tell you to not find more. I'm going to tell you that the less you look for, the more you tend to find. And I get emails from people all the time. I get messages from people. And one of the most common reactions to the plans that I give in the room are, holy crap, when I stop looking for all the trades, I win more. My win percentage goes up. I take less trades, and I typically have better results. So what we're going to do is we're going to talk about NinjaTrader, and we're going to talk about TradingView. Two platforms, T3 indicators, but they are apples and oranges. Different time frames, different bar structures, and slightly different rules for entry. We are going to start with NinjaTrader, but we're going to learn the rules, guys. I'm going to break down the rules individually. You'll be able to recognize them. You'll be able to understand them. Your job is to learn them, and then practice them, simulate. So many people want to trade live. I've got to be live. If there's not a skin in the game, I'm not learning anything. Guys, that is nonsense. Otherwise, there would be no driving ranges, right? There would be no batting cages. There would be no empty gyms with free throw lines and the best in the world practicing getting the muscle memory. And that's what the simulator is, guys. It puts you in a zero risk environment. And then this first step in becoming a confident trader, ASAP, is just post in the room. Tell me what you did. Say, hey, Mark, this is the trade I took. I went long. Here's why. Did I do it right? Did I read my indicators right? Did I have the least amount of risk? Did I have the most profit potential? And every time you post in my room, my promise to you is that you'll get everything that I have rattling around this big old noggin of mine to help you do it better. If there's something that needs correction, we'll correct it. We'll come up with a plan. And if it's perfect, we will virtually high five and you can put it into your plan. Everything that Nexgen teaches is a pattern. It's a repeatable pattern. And it's like 1984, you've got a quarter at the Pac-Man game, and you're playing for 17 hours straight because you know the pattern to keep from getting eaten. That's what trading is. It is recognizing a pattern that provides an edge, an advantage. And guys, it only takes 3 rules to do it, so you've got to learn what that pattern looks like. When you do, you will call your shots. You will know exactly what you're looking for. You'll be very patient waiting for it, and you'll understand that it does repeat every day. So we're going to start with NinjaTrader. 3 rules. That's all it takes. Just 3 rules. Now, these 3 rules are not the only way to use the software. These 3 rules are the rules for the high probability trend trade. This is a trade that will teach you to read your indicators. This is a trade that typically wins more than it loses. It creates confidence through the memory of success. This is your foundation. Because when a rule is met, it creates an advantage. So the rule's in white, advantage is in yellow. And a trade, and I like this is like algebra, right? A trade equals momentum plus a clear path plus a defined entry. And when you learn this recipe, it opens the door for the rest of the trades, guys. Specifically, momentum through rule number 1 and clear path through rule number 2. When you understand momentum and path, if that was your only focus for the first 10 days, you would be able to build your own plan, a consistent plan, a profitable plan based on those 2 advantages. The entry area is just for the trend trade. Takes 2 charts. 2 charts to prove these rules true. There's a large chart and there's a small chart. Your large chart is a very slow moving chart. It's a broad stroke of a brush, and it really does. It shows the overall opinion of the market. What's the market doing today? Let's look to the large chart. Well, it's trending down and it's going fast and there's nothing in the way. You will define direction, momentum, and areas using the most current bar on the large chart. The first bar is all it takes. This is where rules 1 and 2 are met, the momentum and path. When you have those, you'll go to the small chart, and it's like an x-ray of that 1 bar that gives you 2/3 of the good stuff. You'll see that fight. You'll pinpoint where the fight is most likely to be lost, and that becomes your entry for the highest probability trend trade. By using a small chart to refine the large chart look, you will be able to reduce risk. You will be able to maximize profit potential. Who are you trading with or against? I think this is probably the most important picture. Big charts define areas and direction. The large chart reflects large crowd opinions, the man, the 1%, the institutions, guys. And the large crowd typically wins more often than they lose. They have the money and the resources to do it. So your methodology, your plan, your rules are designed to keep you in the good graces of the large chart. Your small chart is the fighters, the ne'er-do-wellers. They create that little retracement. We're going to use rule number 3 to pinpoint where the small crowd is most likely to go belly up and fail. That's where the market is most likely to continue with all of the advantages of the large chart. That will become your entry for the highest probability trend trade. We're going to use indicators to make it happen. Nexgen has been in the indicator business for nearly 30 years now. There's a reason the longevity is there. This stuff's good. You're going to have areas on both charts. Areas are horizontal lines on a chart. Horizontal lines on a chart can create bounces. You have divergence highs, divergence lows, Fibonacci resistance, Fibonacci support, yellow one-to-ones. All of these areas can create bounces. We're going to use those 3 rules to know when they could stop a trend on the large chart and when they give us our best entry on the small chart. We're also going to use trigger lines. And it's fair to say that you're learning to read triggers because triggers show up in everything that we do. There are small triggers, 2 solid lines that work together. There are large triggers, 2 dashed lines that work together. Fast moving, slow moving. When they're green, they're up. When they're red, they're down. We're going to use trigger lines to define momentum. Strong trigger lines is rule number 1. We're going to use a comparison of these trigger lines against those areas to know if there's a termination condition present, to know if we've reached an area that could stop the market. And we're going to use those large trigger lines on this smaller, faster chart to help refine and pinpoint your amazing entries, guys. Triggers show up in everything that we do. And there's only 3 rules. Did I mention that? Large chart needs strong trigger lines. This is rule number 1. This provides us the advantage of momentum. Strong trigger lines has nothing to do with price bars. These are your dynamic Renko bars. Every time price moves, the bars move. It has nothing to do with areas. Strong trigger lines is one look. And I really think it's imperative as a brand new user, let it be very black and white. Let them either be strong or let them be weak. One gets you looking for rule number 2, one keeps you patient. A strong trigger look in an uptrend. Your small triggers will break above and away from the large triggers. There is space between the two, and that gap between the small and large triggers on the most current bar, whether it's a little gap or a big gap, lets me know that the odds are favorable for the market to continue up. That's your strong trigger look. In a downtrend, smalls are below the large are wide. It's the space between the two that lets me know that the odds are favorable for the market to continue down. So if we go back to crude oil, that space, you can see the big push. In that space, you can see the big push. In that space, you can see the big push. Guys, space is strength. Separation is strength. And when the separation goes away, your triggers are weak. And when your triggers are weak, anything could happen up or down. This is where retracements from the middle of nowhere seem to happen. This is where key Fibonacci areas are more likely to stop the market. Exhibit A, weak triggers right at Fibonacci. Sure enough, the market reverses. Weakness from the bottom, that's where the bottom comes in. All of that momentum, guys, there's those tails, there's that fight. So as a brand new user, let it be strong or let it be weak. Let it be odds favorable or let it be anything can happen. And only one of those looks, the separation, has you looking for rule number 2. Is everybody good with that? Separation is strength. It's almost too simple, and it's the most current bar. My small triggers are up and my large triggers are down. I don't have momentum. I don't have rule number 1 met on this chart. Let's go to another market. Smalls are below the large, but they're up, they're green. I don't have momentum, and sure enough, the market is pushing up. Even on the NASDAQ, it's the exact same look. The most current bar, my large are down, but my small are up. I don't have the momentum I need to feel like it's time to look for rule number 2. And rule number 2 is going to help you define those areas that could stop a market. Termination conditions. Termination conditions are where the large crowd are most likely to make decisions. Whoops. Termination conditions are horizontal lines on a large chart. That's all it is. And when the large crowd gets there, they make decisions, guys. And it could bounce, it could break, it could reverse. You'll never know what it is. So we're going to count triggers when we get there to identify termination conditions. And it starts with price reaching the area. Whether it is up or down, when price reaches a line, All you have to do is ask, where are my triggers? And if all of your triggers remain below an area of resistance, that area is a termination condition. It could stop the market. It could create an untradeable bounce. It could break. I don't know what it's going to be, but if price reaches and triggers remain below, more often than not, it's likely to create a push against any long trade that you may initiate into that area. If price reaches support, all the triggers are above, no triggers are broken, support may stop the market, may create an untradeable bounce. Support may reverse the market completely. So if price reaches an area and 0 trigger lines have broken through, rule number 2 is not met. Absolutely no trades into that area. And it really is that simple, guys. Price reaches Fibonacci support. All 4 trigger lines, both small, both large, are above the area of support. Your highest chance of success, your best case scenario for longevity as a day trader, comes from not initiating a trade into that area. Areas break all the time. This is what it looks like. If 50% of your triggers break through an area, 2 trigger lines, the small trigger lines break through an area, this area has the potential to break based on that momentum. This is the second trade in the plan that I'm going to give you guys. It's called a 50-50 trade. How's that for clever? 50% are through, 50% are not. Keeping the focus on triggers, not price. There's a lot of opportunity here, but they must be managed assertively because it is only potential to break. When all 4 trigger lines get below support, support is broken. And when it's broken, your path is clear. Rule number 2 is met. We're looking to use that momentum. We're looking to incorporate that clear path, and we'll go look for the fight on a smaller, faster chart. And your path remains clear until you reach the next area. And once you reach the next area, it's back to number 1. So let's see if crude oil wants to play nice. Price reaches Fibonacci resistance. Big, ugly, untradeable bounce. No triggers through. Guys, textbook termination. No reason to lose money. 4 triggers don't get through. The potential was there, but it didn't break. Sure enough, reversal. Absolutely no triggers through, even with momentum. Reversal. Only 2 triggers through. It had the potential, but it didn't break. Do you guys see that? Fibonacci is freaking amazing. Fibonacci will give you an understanding of where highs can be, where lows can be, and just a little bit of patience will help you take advantage of that. Here's your cheat sheet, and I'm going to go ahead and drop this in the room for you. Actually, I'm going to drop the PowerPoint that I'm using to teach right now so you have all these pictures. For the brand new user, this is the easiest way to do it. If 0 triggers make it through the area, absolutely no trades. It's red. It's a stop sign. Don't do it. If 2 triggers make it through the area, the potential is there, but it's still red. This is not your best look for a breakout. If 3 of the 4 trigger lines get above that area of resistance, this is your best look for a breakout. This is where that medium probability, that 50-50 trade can be taken, but it's yellow, it's caution, it's yield. You're going to have to manage it assertively. And then once all 4 trigger lines break through, now your path is clear. And your path is clear until you reach the next line. And there will be times where areas are stacked, where it's fib after fib after fib, and you just can't seem to get a clear path. Guys, this is 90% of your day. 90% of your day as a futures day trader is doing nothing. 90% of your day is sitting on your hands. 90% of your day is waiting for the market to give you the advantage you need so you feel comfortable pulling the trigger. The futures markets trade on average of $220 billion hourly. You don't have to be in every move. You don't have to be the first person in or the last person out. The easiest way to use this software, guys, the most profitable way that I've seen to use this software is to let an area hold, resistance or support, or let it break, have momentum, couple it with a clear path, and go pinpoint that fight, guys. And that's what we're going to do right now. We're going to go pinpoint precisely where the market is most likely to bounce. where it's most likely to continue in the direction of the underlying trend. So it's important that the large chart has strong triggers, and it's important that the large chart has a clear path. And now your entry area rules are super specific, guys. And I would encourage you to learn this phrase. You will never miss an entry if you learn this phrase. You're going to use a limit order, which means you're going to wait for the market to come to you. You're going to buy or sell a pullback. That's that small push that's against the large chart trend, and that's going to begin with a reversal bar. You're going to do it at an area, at a fib, at a yellow 1-to-1, at a mid band, because areas are bouncy. And then you're going to insist that that area is inside of triggers, because large triggers will show you where the area needs to be for the highest chance of success. And it's just a pattern. This is your entry pattern. When the large chart is up, when the large chart is strong, when the large chart has a clear path, your small chart is going to be railing north with the large chart. Your reversal bar signals the beginning of the fight. That's the beginning of the pullback. That's that small push counter to the underlying trend. You'll know exactly where that push is likely to go by using the large triggers. Top line of the large triggers to the bottom line. And there's two sets on here. So the tighter they are, the more accurate this is. The more split there is between them, the bigger this retracement range becomes. Somewhere from that top line to the bottom line, that's where the market is most likely to retrace. But trigger lines aren't bouncy. We need areas. We need fibs. We need mid bands. We need yellow 1-to-1s. Inside of triggers, all caps. Most important line of the entry sequence, guys. Because it's the areas inside where the market is most likely to bounce, where it's most likely to continue in the direction of the trend. Because of your large chart advantages, you will activate a limit order. You will wait for the market to come to you at the highest point of support inside of those triggers. You will buy the market with the advantage of momentum, with nothing in the way, the perfect spot where it's most likely to fail. And by defining your areas where the market may bounce, you've also defined where the market shouldn't go. If this is going to be part of that 70 to 80%, the market shouldn't make it beyond the retracement zone. It shouldn't get below those triggers. If this is going to be part of that 70 to 80%, the market shouldn't go screaming through the areas inside of triggers. It will, 20 to 30% of the time. So you're going to wait down here with a stop, and you're going to protect your position, and you're going to say, okay, if they can push through everything where the market is most likely to continue up, I will choose to exit this trade. I will take a loss, understanding that anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. This is where the market should not go, guys. There are absolutely no entries in the KISS plan that come from the wrong side of triggers. There are no entries that come from below triggers, no matter how many areas you have, because you don't know if, when, or where that market's going to continue back up. For the short trade, I don't know if everybody knew this, but this is futures. We can make it both directions. It's pretty cool. When everything says down on the large chart, when the momentum is strong, when the path is clear, you're going to wait for the reversal bar on the small chart. And guys, you're going to see this and anticipate this long before the reversal bar with a little bit of study, but this is the very basic recipe. Reversal bar begins to fight. Where's that fight most likely to go? Somewhere from the bottom to the top of those triggers. That's your retracement zone, but triggers aren't bouncy. You need a fib, a midband, or a yellow 1-to-1 inside of those triggers, because that's where the market's most likely to ricochet and continue with the large chart. This becomes your entry. You'll activate a limit order just below the lowest point of resistance, and you will taunt the small crowd. Come get me. I know where you're likely to fail. Because you've defined where the market is most likely to continue, you know where the market should not go. It should not go above those trigger lines. And 4 to 5 ticks above those triggers, you are going to be waiting with a protective stop. Absolutely no entries are taken from lines beyond the triggers, because once you get to that point, rule number 3 is no longer in play. You don't know if, when, or where the market is likely to go back down. So initial stops are placed where the market shouldn't go. And this is in the plan that I gave you. But here's the cool thing. Sorry, I'm sucking wind. In a trade that typically wins 70 to 80% of the time, more often than not, you're going to get a reversal bar right in the direction of your trade. Your amazing entry is going to have you in high or it's going to have you in low. Risk will be reduced dramatically. And if you get the reversal bar in the direction of your trend, you will reduce risk even more. And it is not uncommon to see Nexgen users have 3, 4, 5 ticks of risk going into the highest probability trend trade that we teach because of your great entries. And it's just a pattern. Did I mention that it's just a pattern? So one of the things that I'm dropping in the room right now, I dropped the KISS plan. I'm going to drop the tracking sheet in here too. On the tracking sheet that I just dropped in the room, under client trades, is like 500 pictures of this pattern. And it's the same pattern over and over. First, it's momentum. It's at least the potential to break. And it's a pullback to an area inside of triggers. Now, this happened on the 6th of November. It starts with momentum, separation. It at least has the potential to break 3 triggers through. And it's a pullback to an area inside of triggers. That's the same pattern. That one's from 2021. Starts with momentum, at least has the potential to break, and then it's a pullback to an area inside of triggers. Guys, if you learn this pattern, you will have the keys to the kingdom. Let's take a look. Oh, that content is no longer available. That happens sometimes when people come and go. First, it's momentum. Then it is path. And then it's a pullback to an area inside of triggers. This is Pete. You're going to see Pete posting in the room today quite a bit. And this one is from 2024. So this was a couple years ago. Great stuff. Great stuff. Are there any questions about the high probability trend trade, guys? Are there any questions about identifying momentum? Are there any questions about the recipe for defining a termination conditions? Are there any questions about pinpointing your amazing entry? If you focus on this trade first, if you let it be easy, if you don't chase everything, this is the trade that'll open your eyes to the rest of the trades. This is the trade that will teach you to see the medium probability trades. These are the trades that'll teach you to even maybe take and manage low probability trades. And it'll all be stemmed from the advantages that you see on your chart. It'll all come from those 3 advantages and then you working through those. This is TradingView. You guys ready for TradingView? That's NinjaTrader. That's all I've got. That was 25 minutes for the highest probability trend trade ever. Your job now, if you're a NinjaTrader user, is to learn how to identify strong triggers. There's like 60 pictures of them, annotated. You can't mess that up. To know when they're weak, so you choose not to trade. To understand a clear path. To know when it's a termination. And to define your entry. Guys, you have everything you need to be successful. Just got to study a little bit. TradingView. Same concept, different looks. Only 3 rules. That's it. It's a trend trade, guys. It's only 3 rules. And I'm going to tell you, this is nothing new. I mentioned earlier that Nexgen has been teaching for darn near 30 years. We have had live classrooms really since live classrooms were a thing. And this trade that you're about to learn right now in this room was trade number 1 in the 2004-2005 Nexgen plan. This trade is over 21 years old and the rules are the same. Longevity, consistency, because it works. So only 3 rules and only 2 charts. Big chart, small chart. Now on TradingView, your big chart is a 15-minute chart. And guys, this is a slow chart. It's like a glacier. We're going to use it to define direction. We're going to use it to define momentum. We're going to use it to define key targets and terminations. So the big chart leads the way, just like on NinjaTrader. Your 1 minute chart will define the immediate strength. Your trend trade plan is designed to keep you from fighting that immediate strength. It will define entry points. It'll show you the fight, where the fight's most likely to be lost, and you will have a simple plan for getting in right at that point. We're going to start with indicators. 15 minute. How's this for easy indicators, guys? 15 minute doesn't have background colors. 15 minute doesn't have large triggers. 15 minute has small triggers. That's it. When they're up, they're cyan. It's like a baby blue. When they're down, they're white. Those are the only trigger lines on the large chart. On the small chart, you will have the more traditional, the large and the small, the fast and the slow. And we'll use these to define momentum, separation between the two. And on the plan that I'm going to give you guys, the second trade is a momentum style trade. It's gonna rely on that momentum look. And then there are areas. I love it if you guys learn what these areas are for. There are divergence highs, divergence lows. There are mid bands and outer bands, one-to-ones. And all of these horizontal lines can create bounces. Have I mentioned that? Areas create bounces. I gave you a little map, a legend, a key, whatever you want to call it, how they can be used. Which ones can be used for entry? Which ones are only terminations or targets? Learn those. It'll make it easier. And then finally, the trend trade, guys. Trend trade relies on a trending market. So we're going to define trend first. And then once we define the trend, we're going to commit to trading that direction. And the rules are pretty simple. So much so that the first two are the exact same rule. 15-minute, big chart, not trading directly into areas because areas are bouncy. So you've got to have room to targets. The 1 minute area is not trading directly into areas. Why? Because areas are bouncy. You have to have room to targets. I know it seems silly. Well, duh, I'm not going to trade into a brick wall, Mark. 99% of you will. Because these two rules are going to keep you on the sidelines. These two rules are going to keep you patient and waiting for the best look. Your entry is going to be to buy or sell that pullback in an area because areas are bouncy. And there's just a little extra to give you the perfect look, and we're going to go over that. But first, we're going to define trend. This is the most difficult lesson you're ever going to get. So brace yourselves. Get your thinking hats on. If the small triggers on your large chart are pointed up, the market is going up. You are in an uptrend. You should only be looking for rules to be met for long trades if you're following the KISS plan. If the triggers are pointing down, nothing but shorts. It's almost too easy. Triggers are down, nothing but shorts. Triggers are up, nothing but longs. Pretty cool, right? How's that for an easy lesson? Rule number two, actually rule number one, says that the 15-minute is not trading directly into areas. You must have room to targets, which means that wherever the market is, wherever you're planning on taking that entry from, guys, you have to have room to make money. Everybody has a different idea of how much room is enough room. The better you are with reading your indicators, the higher probability your trade is, the less you could actually have. My rule of thumb personally is I want at least $100 worth of profit before I hit something because I want time to manage if things go south. So for the new user, 200 is probably a more realistic goal. So the 15-minute is not trading directly into areas. The 1 minute from the point of entry is not trading directly into areas because areas are bouncy. And we don't want that bounce. We want a market that's going to cruise in the direction of the already established trend. So once you have two charts, clear path, trend defined, this is your entry, guys. And your entry will look the same every time, whether it's up or down. It relies on the pullback, the fight. And it relies on the pullback to areas. Now, areas are defined in the picture that I gave you, in the PowerPoint that I gave you. Mid bands, one-to-ones, zones, areas are not HVA lines. Areas are not outer bands. Something bouncy, something concrete. And when you get there, this is where it differs from NinjaTrader. You're not just entering at the area, because this is a bigger, slower chart. There's a lot more pressure behind these small triggers. And until you get to what we call the weak side of those triggers, the market's likely to go down. And it goes down right to the area. And then your entry will be an up bar. You're going to force the market to give you a bar in the direction you want to trade. And you're going to let the corners, the top two corners of that up bar, finish above the small triggers. That's the correct side of the triggers. That's the weak side of the triggers. And that correct side of the triggers, that weak side of the triggers, is where reversals typically happen. And we're just taking a reversal on the small chart to put us in the direction of the large chart. And you'll see it. Triggers are down. I've got a little bit of room to trouble. Here comes the pullback. And we'll see how far it goes. The market just opened. But that's kind of what we're looking for. This is our pattern. And when we get to the area in question, as we did right here, that bar is what starts the down move. So it's just a pattern. First, the large chart defines direction. The small triggers are up. I'm choosing to go up with them. Large chart has room to targets. And I'm like, okay, let's go find an entry. And the small chart's all the way up here. And I'm like, shoot, dang, I'm not making any money. The moment these small triggers turn against the large chart, when these small triggers go down, while the large chart small triggers are up, that's the fight. That's where it starts. Put a box around a lower area. And guys, these are minute charts. It may take you 10 or 15 minutes to get there, but you know exactly where your trade is coming from. And when it gets there, all you need is that up bar that finishes on the correct side of the triggers. That's where reversals come from. We're letting the small chart reverse in the direction of the large chart. That's where the trend trade comes from. And it'll look the same whether it's up or down. First, it's down. There's room to targets. Because the small triggers roll up, I've got to look higher. It's a patience piece. When I get to the higher area, I need a down bar that finishes on the correct side of the triggers. That's your entry. Your entry will look the same every time if you're following rules. If you're not following rules, you're getting in at the area. And then you're absolutely crapping your pants, hoping that it does what you want it to do. It's so much easier to not fight those triggers, guys. So much easier to not fight those triggers. And I'm going to show you why. Because as long as I'm left to those triggers, the market's going down. It's that really that simple. And as long as I'm left of those triggers, the market's going up. And as long as I'm left of those triggers, the market's going down. And as long as I'm left to those triggers, the market's going up. I'm not even looking to see if rules are met here, but the same is true on the large chart. As long as I'm left of these triggers, the market's going down. It doesn't even hint at a reversal until we get to the weak side of those triggers. And it's going up until we get to the weak side of those triggers. Do you guys see it? This is like the greatest patience piece ever. And if you're a jumpy kind of trader, TradingView is pretty easy. TradingView takes a lot of the worry out of trading because you literally have to wait for a bar to close, which means you can say, wow, there's nothing to do for 35 seconds. For me, it's very calming. You'll also use the small triggers and price on the large chart to start the management process, guys. Great entries create manageable trades. Great entries reduce risk. Great entries increase profit potential. But you still have to manage. Just because you took the great entry doesn't mean everything's going to be all sunshine and rainbows. So This is a little cheat code to know how aggressively you may need to manage. On your large chart, the most current price, and it's got to be the most current price, has nothing to do with colors or closes. Wherever the market is in the now, is it left of the triggers, is it inside of the triggers, or is it right of the triggers? This is going to define the momentum in the move. It's still nothing but longs. And one long is not better than the other long, because in one bar in a 15-minute, you can go from right of the triggers to inside of the triggers to above the triggers. So it's in the now. If I am left of the triggers, I'm on the strong side. Strong side is more likely to break 1-minute areas. Strong side is where the market's more likely to go up or down. That's why we don't enter until we get to the weak side, to the right of the triggers, because the weak side is where reversals are more likely to happen. The weak side is where 1-minute areas are more likely to bounce. So getting paid at areas from the weak side is typically a good plan. If you want to hold for a bigger move, the strong side makes it easier. If you're in transition, you are neither strong nor weak in the moment. This is where split profits make sense. This is where protecting your investment, but getting paid, but maybe holding for the bigger move. Because on a 15-minute chart, hell, you could see 100 points of movement in one bar. So you're a little more in the moment. That's going to help set you up for management. Triggers are down. There is room to trouble. It did pull back to areas, and it did close below, but there wasn't any room to go anywhere. It was directly into a 1-minute zone. Rule number 2 is not met, and look how the market is reacting to that zone right now as we speak. Pretty cool, right? You guys knew about it. You had a rule to keep you from trading into it. I love it. Da, 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 da. Da, da, da. Crude oil is stuck like Chuck. Nothing to do. S&P has odds favorable momentum. S&P has 3 triggers through resistance, has the potential to break. Whoops, the S&P has a mid-band here and Fibonacci resistance up here. Guys, if you were going to take this trade, it can't reach the blue line first. If it does, it's not ours. But if it pulls back to an area inside of triggers, you guys see the mid-band there? That's where the market is most likely to bounce and continue with all this momentum. That is where the small crowd is most likely to fail. My stop would have to go up here where the market shouldn't go, beyond the triggers, and the only thing I can do now is hope that they come get me. And if they don't, if they hit that blue line before they give me an entry, it's just not my trade. Large chart never changed. There we go. Now we're in. KISS plan says if I get a reversal bar, actually it says if I hit my first target, I'll go break even. If I get a reversal bar, I'll put my stop 2 ticks above that reversal bar. Guys, I've done all I can do. I've got all the momentum. I've got nothing in the way. I've got room to Fibonacci. The only thing I'm not in control of is whether or not it's a win or a loss. Still in the retracement zone. I'm not worried about it, right? They can come get me. They're going to have to work for it, though. I'm still in the retracement zone. I still have momentum. My path is still clear. Large chart is still the best look ever. If you get caught up in small chart fluctuations, you will drive yourself nuts. You guys want to let this one run out and see what it does? If I get a reversal bar, then my stop will be 2 ticks above that reversal bar. Uh-oh, we're at the top of the retracement zone. Whew. That's scary, huh? Oop, there's my reversal bar. Boom, boom, 2 ticks above it. Saved a little bit, right? In the KISS plan that I gave you guys, targets are predefined, $100 and $200. So we're not looking for a home run. What we're looking for here is a couple base hits, a $300 trade to put us into a position where we can consistently make $300 to $500 a day, get into that 6-figure trader income, right? If they, well, there we go. Welcome to Nexgen. That's what we do. Pretty cool, right? You know where the market's most likely to continue. You know where the market shouldn't go. You know where the market's most likely to go. Guys, that was a $300 trade. In what, 2 minutes, minute and a half? Once you learn the basics, you'll begin to find more. Once you learn the basic concepts of what it takes to identify a trend trade, thanks, Jen, it opens the door for the rest of them. And I sound calm partially because I have no oxygen in my system, but mostly because I know that this entry is an entry that typically wins 70 to 80% of the time. And I don't get to pick which ones win and which ones lose. So it's imperative. How's that for a good word? It's imperative that my focus is on the process. Whoops, what did I do? There we go. That I don't worry about wins or losses, that I focus on having momentum, which I did, that I focus on having a clear path, which I did, that I focus on defining my entry, which I did. And guys, if I take 100 of these, I'm probably going to lose 20 to 30 of them. Most of you don't want to admit that part of it. Most of you don't want to say, I'm going to lose, but you will. You will lose. So you can't skip it because of your emotions. You can't skip it. You have a question, Sergio? Fire away. You just got to be consistent on the process. Let's see what you got, Sergio. And then we'll take a little break. First hour went pretty quick. The next couple hours are going to be all about reading your charts, guys. So while Sergio types this up, do me a favor. If you post in my room, talk about momentum, talk about path, talk about entry, tell me why. And we'll make sure that you're reading indicators correctly. And if you're not, we'll work it. So Sergio, on the big chart, triggers were almost to termination, right? And you're like, dude, that's not cool. So check it out. Sergio, are you ready? I'm about to change your world. What's the recipe for a termination condition? What's the first thing that has to happen? Do you guys remember when I said price reaches an area? Sets off the large chart decision making? Sergio, do you see that price didn't reach the area? So guys, it's real important. And I'm a big language nerd. I really am. You have to learn the language, Sergio. Price reaches the area, then I go to the triggers. It's an order of operations, right? If price doesn't get there, it's a target. Price didn't reach. And then the second thing that a lot of people will say, whoops, and we've all been here, right? Well, Mark, there's nowhere to make any money. There's like 3 ticks to get to that fib, Mark. Why the hell are you taking the trade? Because I'm not trading at the bottom of the bar. I'm trading the pullback to the area inside of triggers. I had all sorts of room to get back to trouble. So if you guys keep it real simple, momentum is always separation. And if there is no separation, there is no momentum. Don't overthink it, right? First it's price reaches, then it's where's the triggers. And what happens is when I have momentum and clear path, it's a pullback to an area inside of triggers. That's a great question, Sergio, and that's pretty common. Because your brain will try to keep you safe, right? Your brain will try to keep you safe. Your brain will say, I know that it looks like all the rules are met, but I think that's wrong, right? I know all the rules are met, but what if? And your brain will jack with you. So learn the very simple. Weakness means that could happen, and it did, right? No areas inside of triggers. I don't know where the market's going to stop. Good stuff, guys. All right, I'm going to take 5 minutes. When I come back, I'll leave you guys with the S&P here. When I come back, we'll look at all the charts that are posted, and we will do our best. If the rules are met like they were previously, we'll trade just like we did, guys. We'll follow the KISS plans. If rules aren't met, 90% of our day is waiting, so we won't. So currently, I do have momentum, but these one-to-ones, because price reached them and the triggers are below, these one-to-ones are behaving as a termination condition. My rules say don't look for the long trade. We'll see what happens. You guys watch it. I'll be back in 5. second half. I'm going to scroll up to the top and click on the pictures that you guys have posted. Remember that I'm not the trade police. It's hard to remember that sometimes. I think for everybody. As new users, we want to see adherence to the rules from the people in the room. As experienced users, you'll begin to see more. So when we go through people's charts, guys, don't judge them on whether they broke a rule. Look at the annotations. A lot of people will take these trades because they look at their charts and they say things like, hey, I had momentum and path and entry and it was high probability and I couldn't wait to take it. But most of the trades, something's wrong. And we come into what's called a medium probability trade. And a medium probability trade means that most of your indicators line up for a trade. However, an issue exists. You have to know these three concepts so that you can identify the issue. And when you have that issue, you may manage it more assertively. You might get to a break even. You might take quicker profits, guys. And this is most of the trades posted in the room are medium probability. These will be most of the trades that you take. So don't forego learning the basics because it opens up the door for the second one, even the third ones. And you're in control of the entry. Nobody can make you enter. If you're uncomfortable with risk, nobody can make you enter. If you're uncomfortable with whatever, no one can make you enter. But if you have the perfect trade, why wouldn't you, right? It's just a pattern that can win more than it loses. When you know what's working for you and against you, it helps you make good decisions on entering a trade, on how assertively you need to manage it. So don't be the trade police, please. Test the nerd. Do I have to have the copier in your trading software to do 2 accounts, or where do I switch them in TV or trading site? Don't ask how I got to. Thanks, Starlink, but I'm going to run with it. So if you want to trade both at the same time, Tesla, you will need the copier. If if you just want to trade one at a time, and I can't really show it because I'm in paper trading, right here at the account, you'll have a drop down. You'll have a drop down here that shows the 2 active accounts. So you could trade them individually if you don't want to trade them at the same time. Or you could just get the copier, and if you're making good decisions on one, let it reflect on the other. But you'll see it up here. So if you open up TradingView and you have 2 accounts, you'll see a drop-down menu. Awesome. Cool. Good question. Good question. All right, here we go. First chart. Bum-ba-da-dum. 34.5 defines momentum and path. 13.2 used for entry and management. I love it. Termination that reversed the market. Yep, that's a strong bottom. Strong triggers on the large chart. Yep, separation is strength. No terminations. Yep, 4 triggers through is rock star solid. Look for an area inside of triggers. Guys, that's about the easiest trade you'll ever take. Joel, this is perfect. This is the high probability trend trade. This is the checklist on the plan that I gave you. That's a trade that typically wins 70 to 80% of the time. Joel, the execution was flawless. All right, now we're going to the next platform. Paul says, check it out, Mark. The triggers are down. I've got tons of room to trouble. They pulled back to an area and gave me a close below the triggers, and I got paid all the way down at the next area for 420 bucks. And Paul, it's the perfect trend trade. Do you guys see it? These are 2 different gentlemen in 2 parts of the world on 2 different platforms finding a way to find success using nothing more than a trend trade. Pete, odds favorable momentum, 3 triggers through, pulled back to the area inside of triggers, half off at 10, added a trailing stop. That market must have been flying, Pete. Look where his entry is. The number is right. The number is right, but it went so fast. His entry showed up 8 bars later. That's when you know you took the right trade. Darn near bought the low tick. Another trend trade. This one medium probability because it's only the potential to break. Great job, Pete. Great trade, Paul. I mean, it's awesome. All right, trend trade. Triggers are up. They're in transition. All right. Space to the next area. There's your pullback to the area. And first bar close, the prairie dog entered with a full bar above the area. 69. And you got paid at 79, right? No, you lost. Did you go short? This says too long at 79. Oh, you lost 10. Okay. So there's a couple lessons here, Victor. Trend is up, right? This is your fight down. That's where the fight was lost and it went up. Would you agree? That's where your stop goes. Stops are not numbers, right? I'm only willing to give up 10 points. And that's exactly what that was. I'm willing to give up 10 points on this look. That's your stop placement. Now, Victor, you're forced into a position. The entry bar is directly into resistance. When it breaks, you don't get an entry, right? Your trade was down here, but it didn't fit the rules. Up here, you are so far away from the entry, it's all over. That little pullback to resist, it's not a momentum trade. There's no momentum in the market to suggest that the top of that area is going to hold. There's going to be times, Victor, where it's better to do nothing. To say, you know what, they just didn't give it to me, instead of trying to find a way, right? Trying to create, to fabricate a way to get into the trend trade. Does that make sense? Well, it's not even a correct entry. That's the challenge. The biggest challenge is that you entered on the bar that was pulling back, and you exited on the bar that was pulling back. So there's your pullback to an area and a close above, right? The next trend trade still has to be a pullback to an area and a close above. It's just not a good look. Now, think of it this way. What if you let this bar pull back and it closes up, right? Now you've got at least some place to put your stop behind on that little pivot. But it's still, it's right into trouble. So it's one of those things where it's the right idea. But if your bar is 18 points away from where the entry actually was, Victor, an 18-point trade's a pretty good trade, isn't it? Yeah, so that trade may be done. It might just be better to wait for the next one. Good lesson there. And I do think that it was a little too late. So are you familiar with the momentum trade, Victor? Where if you have strong triggers, the top of these areas are likely to hold. We talked about them yesterday a little bit. You don't have the rules met for it there. So I'm not creating the expectation that that will hold. Does that make sense? Now, if I had strong triggers up, freaking love it. Take it all day long. Momentum trade in the middle of a trend trade. But because they're kind of wonky, I don't have the momentum trade on the table. I have to wait for a little more pattern there. Good stuff, man. Losses happen, and then we learn from them. Andy, question on TV. When a trade is entered, is the stop set at a point of entry if price goes in the direction of the trade and comes back, or does it need to be moved to activate? Let me read that again, Andy. When a trade is entered, is the stop set at a point of entry if price goes in the direction of the trade and comes back? Or does it needs to be moved to activate, Andy? It needs to be moved to activate. Otherwise, you would get caught with little fluctuations. Okay, it took me a second. Couple of ugly looking charts. Time to go make an omelet. I love it. Can't go up. Can't go down. Can do nothing. If I can't buy or sell, I have to wait, right? You have one that will follow up on that trade, Trina? I love it. All right, Andy. Triggers up. Strong. Room to trouble. And you get in off the outer band. And one of the challenges is that the outer band's not actually an area. And you get in, and I know that you lost 100 close too late, but it could have been 500. And Andy, you just take quick profits. And Andy said, and I love this, I broke my rules on profits, and it cost me money. And no matter what your plan is, when you begin to deviate, it can have challenges. And there's the exact same look, all the momentum. Of course, everything's going up here. It's counter trend. But because of the momentum, and notice that he's in and out on the same bar. And Andy, that's your plan. I like that. Andy says in silver, and this is silver, right? In silver, they're so erratic and have such good moves. I can pull a couple hundred out in one bar and then just wait for the next trade as long as the conditions are right. Nicely done, Andy. And there it is again. Everything is up, right? And look at, he's got the momentum. And he just jumps in. Just jump the fudge in. Delayed entry, had plenty of profit when closed. Delayed close, thought it went negative. Walked away with 50. Right on. Same look. Another delayed entry. Andy, did you ever get with Jason to see if he could help with that? I just don't think it's normal. Just don't think it's normal. All right. I waited 2 hours for this trade. This is you, Sergio, right? Momentum. Potential to break. Pull back to the areas inside of triggers. Very low risk. First target. And then divergence prints. And you gave a lot back, right? Waiting, well, you did a good job. A little late on the entry. Just a little bit late on the entry at the mid-band. So let me see if I can give you a little management help on this one, Sergio. Do you see how it's only the potential to break? That's the most important thing. That divergence typically pushes it lower. On a potential to break, especially with only 2 triggers, I'm out when divergence prints. I can always re-enter, Sergio. But that divergence with only 2 triggers, more often than not, seems to push that market down lower. So if you see it setting up in the potential, you can put your stop a couple ticks below the reversal bar marker, and really that $7,500, it adds up over time. Does that make sense? Good stuff. Great trade. Great patience. I mean, it's the perfect look. Just didn't follow through. All right, let's see who's next. Dun, 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 Got one from Miss Jen, couple from Miss Trina. All right, Miss Trina. Down, transition, room to targets. I like it. So pull back to the area. There's your close, but it's into trouble, right? Trouble holds, trouble holds, trouble holds, trouble holds. And then it starts to go down. And then you said, I'll get in down here at 85, 20 points away from my entry, because with this look, the expectation is 875. And then Trina, I know this was a follow-up to Victor's. And let's talk about the one thing that's the biggest difference between the two. Not strong triggers to push it in the direction. Strong triggers to push it in the direction. Does that make sense, Trina? Y'all's late entries have a way higher chance of working if you have odds favorable momentum pushing them. Because then you've got momentum to help. Large chart's perfect. There's the scramble, right? But then once it's odds favorable momentum, you got a fighting chance of pushing lower. So what's today's lesson? If I'm going to take a late entry, I probably want odds favorable momentum pushing it. Down, strong side, room to targets, momentum style trade. Stop was probably a little tight, Trina. So let's look at your momentum trade. The entry should have been what, 17.5? So you gave up $100 on the entry. Gave up $100 on the entry. And didn't put your stop in the right spot. Did it go down from there? And sometimes momentum trades don't work, guys. And it's my experience. I don't know what the percentage is. But one of the things that the correct entry does for you is it reduces risk. It makes risk so much smaller than if you wait for confirmation on a momentum trade. Because when it looks like this, if those small triggers roll up, if the momentum trade fails, it's probably going to the midband. So it makes sense. That's the one where you can get away with a limit order right at the area. And you'll find that if you're going to take momentum trades, waiting for confirmation is a disservice to the trade. The way it has been created, you're just not doing it any favors. Hey, that looks familiar, Boaz. Momentum and path, pull back to the area inside a trigger, stop where the market shouldn't go. Boaz made more money than me on this trade. Great trade. Guys, it's the exact same trade we took live. He did it better because he didn't have predetermined targets. Great job. That's awesome, Boaz. I like seeing you guys take the best of the best. It really is pretty easy. Strong triggers. Directly into a termination. Pull back to the area inside of triggers. And Pete, you chose to take it anyway. And it worked out for you. That's a rough look, though. Weak bottom. Directly into terminations. Divergence from the fib. Split triggers, so a lot of risk. And you pulled one off, man. Make sure you get that Superman cape dry cleaned. Run. Flat triggers, no momentum. You guys getting aggressive today. Divergence. Went in first, going down, break even because it didn't look good to me. I don't disagree. Once those triggers roll, it's got a better chance, right, Ron? Once those small triggers go up, you have a fighting chance. Until they do, that's going to be a hard trade. I love seeing that you're human. And I love that you got out of that one break even. Oh, man, that's probably not my best trade. Let me get out of that. Let me wait till my advantage is there. Good stuff, Ron. I like seeing your softer human side. Momentum, Pull back to the area inside of triggers. Easy peasy, Pete. Nice job. Nice job, Pete. S&P termination. Price reaches a mid-band. Large triggers are a full bar away. Jen, I think I did. I'm sorry. It must be a winner. Oh, nope, it's no trade. So let's see what you did. Weak bottom, 2 triggers through, divergence prints, no trade. Beautiful, Jen. So let's talk about the 50-50 trade. Can we do that? Because, guys, we've got like 2 hours. The 50-50 trade. This is a trade that is the second trade in the plan that I give you under the under NinjaTrader. ES does not have any support fib anymore, even not on the 15-minute chart. Is it mean short is... Hold on. And the ES... I don't think I understand what you're saying, Boaz. Did your fibs go away? Because we didn't need a fib here. Price reached a mid-band. Large triggers were a full bar away. That was the gap theory. You didn't even need Fibonacci to know that it was probably going up. Can you show me a picture of what you're saying? I'm not exactly sure what you're saying. Sorry, sometimes I don't get it. And I fully realize that. So Jen, I'm going to take a picture of your trade. And then I'm going to go to the KISS plan. And I'm going to go to that 50-50 trade. And I want you guys to see just how effortless trading can be if you learn plans, if you learn rules. And these aren't the only rules. These are the optimize your chances of success rules. So for this 50-50 trade, it starts from a strong top or bottom. And a strong top or bottom means that you had a termination condition that reversed the market. And Jen did not. So there's the first no. Bonk. Odds favorable momentum on the 13-2? Absolutely. Odds favorable momentum on the 5-1? Absolutely not. Smalls are inside of the large. That's weak. No divergence on the 5-1? Absolutely not. Boom. And guys, that is an avoidable loss. And it's only 2 triggers through, which doesn't fit that one. Guys, what Jen did here is Jen said, man, with all that momentum, it's pretty exciting, right? It's pretty alluring. Look at that momentum. That area should break. That area has to break. That area will break. With all that momentum, how could it not break? And then she said, wait a minute, Nexgen gave me a plan designed to optimize my chances of success. And I'm missing a lot of the pieces that say this one's more likely to go up than down. Jen, that's a great picture. Nicely done. Three triggers through from a strong bottom. Pull back to the area inside of triggers. All the way to Fibonacci resistance. Good stuff. And now we have a termination that says absolutely no more longs. And look what the market is doing. Oh, there's no support down on the ES. Nope. Sometimes we run out of fibs. And we did. We ran out of fibs to the downside, didn't we, Boaz? At noon, I want to say it's noon. At noon, there will be a recalculation, and that happens. You will run out of fibs sometimes. And when you run out of fibs, it's even more important to rely on momentum and path and look for that small chart management. But it does happen sometimes. It'll probably print one-to-ones. And then when it recalculates at noon, we'll probably find ourselves with some more fibs. But it does happen from time to time. Usually in a strong trending market, you'll see it. Where you're just like, wow, there's nothing to hit. Can I see how those large triggers are still up and above support? If you were thinking about short trades, that's the kiss of death. They're still up. All the triggers are above. Even though that looks pretty, there's just nowhere to go. Shoot, Ron's probably already long. I don't know. Smart butt. Can't go short. Don't see any longs. I'm going to sit on my hands. Crude oil. We got inventories in about 10 minutes. Here's a good lesson. Whoops. Here's a good lesson. I know I asked this before. Do you have in your trade plan pull back to mid-band with large triggers? So to trade the gap theory, Jen, do I have a trade with it? Yes, I do. But Jen, you can't gauge the gap theory just on one thing. It's got to be more than just the gap theory. Let me see if I can find. I took one yesterday, and I want to say it was a short. But I took it. I don't know where it's at. I will take the gap theory, Jen, if I go to my 15-minute chart, because I always have both open. And if these are down, and it's a gap theory down, sometimes I'll take a shot at it. And if they're up and it's a gap theory up, sometimes I'll take a shot at it. And most times I won't, because I trade the NASDAQ and there can be 72 fluctuations. But if I'm feeling a bit randy, that's how it happens. I let my 15-minute trigger direction define that the gap is more likely to work. And just like that, she added more to her plan. All right, large sharp momentum, wide triggers. I didn't take into consideration the magenta, and you shouldn't on the S&P. But I think you're missing fibs. Maybe, maybe not. Let's see. Stopped out before I fully moved my loss beyond the retracement zone. Moved so quickly, kicked me out 400 loss. After seeing it retrace and go up, I thought wrongly that I was getting in at a good spot. Too impatient. Jumped in, wiped out everything, and then some. So that was at 10:07, Aaron, right? You had momentum. Your path was clear. Beautiful. This jump in is the holy shnikes. It's going without me. Been there, done that, right? That's an entry spot. That's an entry spot. That's stop placement. That was at 10:07. So let's go see, just for grins, Aaron. Just for poops and or giggles. Hey guys, this is important. This part that we're doing right here, Aaron, this is important. Because you got in at 51, 44 seems ridiculous for a stop, doesn't it? If you get in at 49, it's better. If you get in at 47.50, it's better. Aaron, rule number 3 got you. You jumped in fearful that the market would go without you. That's okay. That's a normal part of it. And you're learning to trust this. But here's what you need to do. Are you ready? Don't just accept that that's a good entry and it didn't work out. Don't do that. I'm going to tell you right now because that's what I did for a long time. Momentum and clear path. Large chart is perfect. My entry rules say buy a pullback at an area inside of triggers. Stop 4 ticks below triggers. And then I want you to just write it on the chart. I want you to start to convince yourself. If I had followed KISS plan entry management rules, this would have been a winner. And I think that's the part that needs to happen. If I just would have followed the plan, this would have been a winner. My opinions created a loser. My opinions put the stop in the wrong spot, right? My fear of losing out. And it's okay, Aaron. And I'm certainly not knocking you for it. But what I am saying is that when you take the wrong entry, instead of annotating your chart, what did you put? Stop me out before I fully move my loss. After seeing it retrace and go up, I thought wrongly that I was getting it at a good spot. So why did you think this was a good spot? Just jumping in. Not coming anywhere from a bounce. Absolutely no fight. This is what happens when it's money, not process. And I know because I've done money, not process. I would wager to say you didn't think it was a good spot. I would probably say it's more like that. And you don't have to answer. I'm not looking for an argument. But I bet dollars to donuts, this is what you were thinking. Not, hey, that's a great spot for a long trade, right? So be honest with yourself. And when you go to your spreadsheet and you're tracking, oh shit, going without me entry. And Aaron, what you're going to notice is that if you're being honest with yourself on your annotations and you are actually tracking your trades and you're using the spreadsheet the way intended, you probably have seen this no less than 15 or 20 times in the last 30 trades, right? And that's okay. This is part of the learning process. But if you put on the trade, I think this was a good entry, you're not doing yourself any services. If you put on the trade, I effed up my entry, and as a result, I lost the trade. If you're using the spreadsheet the way it's intended, you're going to go back tomorrow and you're going to look at what you did, right? Just like the trade posted in Traders Chat. You had the potential to break, divergence printed. There's a lot of things wrong with that trade. But we convince ourselves that it's good stuff and the market's just an asshole. What didn't work? Well, your spreadsheet lets you know that the oh shit going without me entry doesn't work for you. So Aaron, that's your thing. That's the thing that you want to take by the short hairs and fix. That's the thing that you want to focus on every morning when you wake up ready to trade. You want a big piece of paper and you want your most delicious crayon and you want to write it out huge. I will not take the oh shit entry today. And you still might mess it up. but at least now you're focused on what isn't working for you. Does that make sense? And guys, this is for everybody in the room. My thing was trading into termination conditions. But Aaron, every time I took a trade into a termination condition, I believed that the market just sucked and hated me. True story. I believed that when I lost a trade into a termination condition, it was because the market sucks. And it wasn't until I started annotating my charts lost this trade trading into a termination. You want to stop messing that up because it's frustrating? It's okay. You have to identify it first, right, Aaron? This is what I should have been writing. Do you know what I used to write? Stupid market. Perfect trade. True story, guys. Maybe I'm a little bit of an egomaniac. I could take nothing but perfect trades. And it wasn't until I got the coaching in the room from John Novak, hey, Mark, how many times are you going to trade into these lines without the triggers breaking and believe that you're entitled to the win because you're losing more than you win? So there becomes this thing where John gave me the focus. And John said, okay, every time you're going to take a trade, I want you to ask, did price reach a line, right? Did price reach a line? So Aaron, every time you're going to take a trade, I want you to ask, did I wait for a pullback to an area? And even more so, I want you to remember this phrase, and this is what's going to fix it, and it's going to take time. This is my entry verbiage. If I don't use a limit order waiting for the market, I'm not taking my best entry. I'm taking the entry that doesn't serve me well. If I don't have a pullback, I'm not taking my best entry. If that pullback's not in an area, I'm not taking my best entry. If that area is not inside of triggers, I'm not taking my best entry. So Aaron, you have to know what it is to do it right so that you can stop doing it wrong. And as the market's going up and you're fearful of it going without you, you've got to say, I trust. I've done the study. I've stopped chasing the money. Excuse me. And more often than not, that's my pattern, right? And if I jump in up here, that's my pattern. And I don't know if I trust it yet. Let me look at another one. Oh, that's my pattern. Well, maybe that was just a fluke. Let me go see again. Holy shit, that's my pattern. And what happens, Aaron, is there becomes this point where you begin to trust your patterns, where you begin to say things like, I know that with momentum and 3 triggers through, I have to wait for a pullback to an area inside of triggers. I know exactly where my stop goes. And man, catch that one. Catch that one for 10 points, you're done with the day. But if you jumped in here, you got stopped out. And if you jumped in here, you probably got stopped out. And if you jumped in here, you probably got stopped out. So it's just real important. Go back to the language. Learn the language. Because the language is literally the recipe for success. And Boaz says, Mark, I know you're going to talk about it. Let me show you how it's done. Momentum, 3 triggers through, perfect pullback to the area inside of triggers, and easy money all the way down. We have to do it the hard way before we do it the easy way. Aaron, don't get frustrated. You're in the middle of learning what not to do so that you can be an absolute rock star on doing the right things. You're making all the mistakes now so that you're not making the mistakes later. You're learning every day and you're doing great. And I think it's important to say that. Boaz, flawless. Great trade. You're welcome. Never quit on anybody in my life, Aaron. You're not going to be the first. We're going to get this. All right, quick talk. Strong triggers or weak triggers, guys? Work with me here. Strong or weak? S or W? Weak. Clear path, termination, or potential? Termination. So weak triggers and a termination. Does it matter what happens on the small chart? And Aaron, you're going to start doing this. It's weak. There's nowhere to go. Hell, I don't even have an area inside of triggers. Whatever happens next isn't mine. Whatever movement comes next, whatever up, whatever down, whatever ticks, whatever dollars, those aren't mine because I can't identify a pattern that I can prove wins more than it loses. Does that make sense? And then you're just like, no pressure. No pressure. I'll go make a sandwich. This is the NASDAQ. NASDAQ moves too fast for you guys. Let's not do that. Crude oil. All that momentum. No areas inside of triggers. That was a lesson we were going to do. Even with the perfect chart, no areas inside of triggers, guys. It's death. You're where the market shouldn't go, and look what it did. And they screamed all the way up directly to the termination. That's one of the best lessons, and this goes back to learning the language. If my entry comes from an area inside of triggers, because that's where my advantage is, I have to be okay not jumping in hoping shit works out. Pardon my French. And if I don't have a clear path, even with the momentum, I have to resist the temptation of activating that limit order. And if it goes up, cool. But it's not my money. I love that phrase, not my money. What? My rules aren't met? It's not my money. And look at that. They still haven't gone down. They might. But those two simple rules kept us from going short. I like it. You guys are amazing. You make my heart happy. Good job. What would you guys like to talk about? Aaron, great lessons, dude. I know it's frustrating. I know it's frustrating when you're like, I'm so close, but I'm not there yet. But you're killing it. You're doing awesome. Triggers down. Triggers down. Room to trouble. Small triggers rolled up, so my only option is a pullback to resistance with the close below triggers. Do you guys see it? Why'd you break even, Sergio? Short money. What's with the jump in? You got scared. All right. So what scared you? Let's not just say I got scared. What scared you? Two divergence? I only see one. I only see one. So let's go through it, Sergio. Remember when we said advantages are the reason for a trade? I want you to see what's going on. You've got a strong top, right? The buyers lost and the sellers took over. That's awesome. You've got strong triggers. You've got the best potential to break. Large chart's great. Where's the lower divergence? Oh, that one? But there's no divergence here. That's not a second higher divergence. That's just one divergence. Does that make sense? That's just one divergence. It happens to be higher, but there was no lower divergence. You take the rock star entry, best of the best, couldn't hope for a better entry, and you take 2 ticks on it. And you're like, I'm scared. You had everything going for you. And Sergio, I don't know if you're live or sim. It's none of my business. Have you ever been in a bar fight, Sergio? Let's do the bar fight analogy. Strong top, Strong triggers, best potential to break, no divergence, strong triggers, tiny little area for entry, small's way below the large. This, hold on, get over here. Get over here. Dang it. All of those advantages are the drunken rugby team looking for a fight, right? If you just start counting all the advantages you have in going for you, Sergio, they're overwhelming. Right here, the captain of the crochet club called you an asshole. Which side of the fight do you want to be on? From the strong top with all the momentum, right? Everything is perfect for entry. All you had to do was keep your stop in place and let it work it out. You were scared because of that entry right there. That's not the entry, is it? That's not the entry. That's the oh no, it's going without me entry, which creates an unmanageable trade. And your stops are so freaking tight, Sergio. Your targets are so freaking tight. So I don't give trading advice, but I'm going to share something with you, all right? This is a big one, Sergio. You could potentially say to yourself, I am on simulator. I can't lose money. I will let every trade either hit my targets or my stops. When I enter, hands off. Because Sergio, if you are terrified on simulator, what are you going to do when it's your real money? If you don't want to trade fearfully with real money, you got to learn to be brave on simulator. Does that make sense? If this trade loses, what do you lose? Your wife is still with you, right? You're still a handsome fella. Let them play out, dude. Take some losers, but let the winners go too. That's what's going to develop trust. If every one of your trades is a 2-tick win, your brain believes that that's the best you can do, and why the hell should I be a day trader? So one of the ways you can change that and make that a little bit better, I don't know if you knew this. There's management, the most basic management ever for the high probability, the most basic management ever for the medium. Learn to let them play out a little bit, Sergio. It'll change your life. When I'm on simulator, I'll tell you right now, guys, I still, when I'm trading live money, my goal is always to get paid. When I'm on simulator, I'm a freaking yahoo. I will hold for the biggest moves ever. I will say, man, everything is perfect. I'm going to hold, and I'll take the biggest, craziest moves ever on simulator because I got clackers of steel. Nothing can go wrong on simulator, and I know that. Practice like you want to play. Jen, little chili dog action. Nicely done. Little chili dog. Fast market, quick profits. Very nicely done, Jen. They add up. Imagine that on a 10 lot. Imagine that $100 on a 10 lot. They do add up. There's no doubt about it. Uh-oh. 13 seconds, 12 seconds. Look at that. We called our shot, didn't we? 8, 7, 6, 5, 4, 3, 2, 1. I'm obligated to take this trade. Stop goes where the market shouldn't. Should we put our profits at the first sign of trouble since it's on the weak side of triggers? What do you think, guys? Does it fit the rules? Triggers down, room to trouble, pull back to the area, close below. What do you think? Do we put that one there? We'll take a couple off at large triggers because they can create bounces sometimes, right? Maybe we'll take a couple off down at divergence low if they get there. Oh, they tapped it but didn't fill it. Those sons of guns. Hate it when that happens. But it happens. Sure is a lot of risk, Mark. Sure is, but it's the perfect trade. Why wouldn't I take it? I already got paid on half. What do you think? Just break even and let it run? What a problem, Victor. Took you out because it reached the evaluation goal. How we doing so far? Isn't that everything that we talked about? That's the perfect trend trade. Are they going to catch us at that divergence low? There's the second contract. What do you think? Are they going to go the distance? I'll be damned, guys. The perfect trend trade. Live, stereophonic. All right, so the triggers were down. Only shorts. Room to trouble. And it was weak side, so manage. Guys, this is where we called our shot. That's where our trade came from. We called it right about here. So 1, 2, 3, 4, 5, 6, 7 minutes to get to it, right? Telling you guys, if you don't learn to do it the easy way, you're going to struggle. Small triggers rolled up, so I needed higher resistance and a close below. I got you, Poppy. Use large sharp for targets. Could we defend it in a court of law? What do you guys think? Can we defend it in a court of law? If my job is to only take KISS plan trades, did I do my job? That was, is this today? That was only a 5 lot. That was a $2,900 trade. And Trina, that's what's important. Did I follow the plan? Of course I did. It's my job to. I'm not allowed to take trades if it doesn't fit the plan. That's the one I want you guys to learn. That was from 09 to 80. That was a 29-point run. 29-point run. Love it. You guys are amazing. What's up, 8 ticks? Few rejections at key levels. Resistance 1 to 1. Waited for a pullback. Entered short at the small triggers. Making money on the way down. 143 ticks. You got to change your name, 8 ticks. It's just not 8 ticks anymore. Great job. Good to see you in here. Direction down. Weak side. Pull back. Close below. Easy money. Phil, doesn't have to be harder than that, does it? That's the same trade. No emotion, no opinion. I don't call trades in the room, guys, but if you are trading the KISS plan, if I'm taking a trade, it's because it fits the rules. Momentum. All right. So Boaz, If price reaches a midband and the large triggers are a full bar away, what does that let you know? Midband's a termination condition, right? Do you know that lesson, Boaz? And then from a weak bottom, directly into a termination from a weak bottom, that trade is going to lose more than it wins. You didn't think so? You didn't think it was a full bar away? That's okay. In the moment, it might not have looked that way. That weak bottom is the giveaway, though. Especially after a run that big, weak bottom, it's just a big chart trend trade. It's okay. Looks like they were setting you up for the apology after. Did they? Oh, they sure did. That was the, hey, Boaz, we're sorry. We didn't mean to stop you out. There's one for you. Make some money. That one took you out too, Aaron. Where did you get in? The area inside of triggers? The lesson on this one, guys, is this one right here. Did you take the right entry, Aaron? So you didn't take the right entry? That's okay. You'll believe it eventually. One day you'll believe it. Large sharp midband if the large triggers are a full bar away, guys. That's what defines a midband on the large chart as a termination condition. So if you took that trade, go back and annotate it. I traded into a termination condition as I lost, as I typically do. That's my thing. If you're not super familiar with what that looks like, go to where is it? Client trades on the spreadsheet. It's the gap theory. And there's a whole bunch of them in here. Price reaches a midband, large triggers are a full bar away, it's more likely to close the gap to those triggers, especially if it's coming from a weak bottom. Pete, weak bottom, odds favorable, directly into the termination condition, and you pull a little out of it. Not 3 triggers through, Pete. Directly into a termination. Just because you point someplace different on your chart doesn't mean you didn't trade into a termination. 84, right there, is where the market hit that termination. 100% without question. It's not a it's not a potential to break trade. It's an oh shit, we reached our target trade. And look at the reaction from it. Oh, sorry, Papa. I got you. Thank you. Let's do it real quick. So, Papa, I'm going to do it like this. If I'm trading a 4 lot, and this is paper trading, guys, this is not a real trade, and I sell the market on a 4 lot, I'm going to put my profit target at wherever I want to get paid. I'm going to put my stop wherever the stop belongs. And I'm in a short position. So if I want to take partial profits, I have to reduce my quantity. And I will right click and I'll put a buy limit order below the market. And if it hits it, get up there. If it hits it, it'll take 2 contracts off and adjust. And if I want to take 1 more off before I get to my final goal, I'll put 1 more limit order in. So you can put those in any increment that you want. So you put your stop where the stop goes, put your target where the target goes, and then if you sell, a buy limit will take a partial. If you buy, a sell limit will take the partial. And if it hits your stop, you've got to close out whatever remaining contract you have. Does that help? Practice it on sim. Practice it on paper trading. Yeah, it's that equal opposite reaction. If I'm selling, I have to buy to get out. So I'll just adjust the contracts. And when I trade, very often what I'll do, if I'm in a 4 lot, I'll take 2 off at the first sign of trouble. I'll take another one off, and then I'll leave that final contract as my big chart target. Good stuff. Victor, perfect entry, doing awesome, and I love this. Got kicked out at 375 since the leader account hit the 2750 goal on the eval. Welcome to Semi-Live, Victor. You did it. You passed it. And you passed it with trend trades. You should have flipped the leader account and followers would have reached goal on all your accounts. Yeah. So, Victor, I want you to write that down on a piece of paper. I passed my evaluation with trend trades. When I started focusing on the trend trade, I won more than I lost. When I stopped taking all those other silly trades, I was able to find the results I was looking for. Write it down somewhere. You got to believe it, because that's exactly what you did. Beautiful trade. Beautiful trade. And now you know, Victor, no, there are no unwritten plans. There are no in-your-head plans. Someone told me that once. There's no such thing as a mental plan. Do you guys know that there's like this huge thing? When you write something down, it sticks. When you write things out, it sticks. If you just say it, you'll believe anything you tell yourself. But when you write stuff down, you'll be floored at just how much things begin to stick. Termination for the win, huh? It pays dividends, Phil. You guys know, it's funny to me because I did the same thing you guys did. Everybody's seen this, right? Learn the rules, practice the trades, keep it simple. This is the same coaching I got when I started with the software. This was the exact same coaching that John Novak gave me. Mark, here's your rules. Practice them, go take pictures of them, participate in the room, and use your spreadsheet. And I didn't do any of that stuff. I'm going to tell you. I'm not afraid to tell you. I didn't take pictures because I can remember. I didn't write rules because I can remember. I didn't participate in the room because, shoot, I don't want anyone to see that I don't know what I'm doing. And guys, I never asked for help. And this was my journey. This is the Mark Novak story. Looked like fun, right? I want to be like John Novak because he's my brother and I know how successful he's been. And then he tells me I have to learn rules, and I'm like, well, shit, you mean just handing me the software isn't going to make me rich? Oddly enough, most of you believe that owning software will make you successful. Not any more than sitting in an oven makes you biscuits, guys. And then you practice, but you don't practice like you want to play. You break rules. You jump in. You say, oh, it's just simulator. But you win. And you create this false sense of security. And you're like, yes, I'm brilliant. Children want to be me. And you go live. And you lose. And guys, I lost $5,000 in 2 hours. 5 hours. It took me 5 hours, 2 hours, sorry, to lose $5,000. 21 trades. I couldn't tell you why I entered. I had no idea why I exited. Usually because my stop got hit. And I got booted down to the I don't know shit stage. And now that stage is no fun to be at, right? Because when you're at this stage, you start questioning everything. You're like, well, maybe this isn't for me. Maybe the software doesn't work. Maybe the trade rules aren't as good as he says, right? And this is where you have two choices. You can quit, and I don't want you to quit. Or you can start on this path. You can choose to start on this path from the beginning and forego all the heartache. But if you're at the I don't know shit stage, right? If you're at that frustrated stage, if you're at that, man, I'm not finding the success I want stage, and you know who you are, you know exactly who I'm talking to. This is your wake up call. Learn these 3 rules like your life depends on it. Learn the language. Learn what they look like. Don't worry about the money. Focus on the process. You have to be able to identify momentum. You have to understand termination conditions. And for the love of all of it, guys, you have to be able to find an entry. Focus on this. Make this easy, right? Make this second nature. Make this effortless. And you will be amazed at how easy day trading can be, because it's no longer I hope, I wish, I want. It's my rules are met or my rules are not. This class is designed 100% to keep you out of all of this. Walk into the room, say, you know what, Mark, I don't know shit. How do I get there? We give you everything you need to be successful, but you've got to follow the plan. You've got to follow the process. You've got to do the work. You've got to take the pictures. You've got to post in the room. And you have to believe that futures markets produce enough money generated every day that you will never have to work another day in your life if you just figure this out. All right, there's my pulpit, right? There's my pulpit. With one large trigger above the reverse of our marker and one below, is that still a full bar away? Technically, Jen, no, it's not. But tell me what you see. Strong trending, weak bottom, into the midband. Strong trending, weak bottom, into the midband. Well, technically, it's not a full bar away, is it? So if you are 100% black and white by the rules, you have to say, oh, that's not the gap theory. Right? But Jen, it's a weak bottom, isn't it? What do we find happens from weak bottoms? Midband and continuation very often, right? From a weak top, back, continuation. From a weak bottom, back to that midband, continuation. Oh, man. Weak bottom, pulls up, continuation, same. So there's a point to where you have to say, okay, the KISS plan says that's not a termination condition. Technically, the midband is not a termination condition. But in a market that's been pushing down from a weak bottom directly into a midband, do I need to be the first one in, right? And if you took it, you're doing all right. We'll see what happens. We'll see what happens. And let's go to another look. This is the NASDAQ. Weak top, bounces, continues back up. But it was the weak bottom back to the midband, right? And it never really gets through it. Weak bottom, continuation down. Weak bottom, continuation down. So Jen, there's a time where the midband is more likely to hold. And just because it's not technically a termination condition, because of a quarter of a tick difference on a moving average, you've got to be suspect. And you can see that it's not getting through it, right? Not yet. Does that all make sense, Jen? Everything starts black and white. everything starts black and white, guys. It's your chart reading that helps you out. And there you go. And Aaron, that's the same reason right there. The midband is a term. Weak bottom, midband, and then Jen, there's your look, right? It was 2 ticks off from the weak bottom. Your entry makes sense, Aaron. So props right now. Good job. Your entry makes sense. Your momentum makes sense. You needed that lesson on the midband as a termination to keep you out of the trade. But dude, you waited for the pullback. And there's nothing worse than finally following your rules and getting run over. It was the midband that got you. Does that make sense, Aaron? But dude, you did it. Stop makes sense. Entry makes sense. Momentum makes sense. It was just that termination that got you. Good job. Full bar termination. I don't know what a full bar termination is. Sergio, you have momentum. Honestly, you have a clear path. You have a pullback to an area inside of triggers, and you got stopped out. Nope. Midband is not. So the gap theory, Sergio, is this right here. Let me find a picture for you real quick. If you reach the midband, it's not the bar. It's where the large triggers are. Do you see how the large triggers are below the reversal bar marker? And if the market went down a full bar, it still wouldn't hit those triggers? That's the gap theory. That's what makes the midband a termination condition. And they're all in that spreadsheet. Study them a little bit. Nope. What was your red flag? Your red flag, Sergio, was that divergence from a 1-to-1. Especially on the NASDAQ. That divergence from a 1-to-1 is a killer. For me, that's an absolutely no trade look. And NASDAQ's different, Sergio. This is a 13-2. Right? So if you saw that on the S&P, on your big chart, would you go long? Probably not, right? No. So you have to remember that on the NASDAQ, this is your big chart on every other chart. And when you see that, if you do choose to take the trade, very often, at least waiting for a reversal bar gives you a fighting chance. A lot of base hits, market reversed out of nowhere. Pete took the first one, got out, trouble. Nicely done, Pete. Nicely done. They're trying, aren't they? They're trying. We'll see what they do. What are these guys doing? Triggers down. Room to trouble. Pull back to an area. Are we going to get another one out of it? 9, 8, 7, 6, 5, 4, 3, 2, 1. Boom. Stop has to go above the pivot. Profit targets, I don't know. That's pretty tight though, isn't it? Does it fit the rules? Triggers down, room to trouble, pull back to an area, close below. I like it. It fits the rules, doesn't it? I might even take this and put it on the other side of that HVA. They're going to make it. You can do it. How fun is trading if you just follow rules? It's only a 4 lot. Bonk. There's another $1,000. That's two high probability trend trades. One for 1,300, one for 2,800. Why are you looking for more, guys? Why are you hell-bent on having all of the trades instead of the best trades? That's a question you have to ask yourself. I am going to take a few minutes. When I come back, Jen, look at that. I'll be damned. It's almost like we knew that was the most likely outcome because of patterns. That's the one. First, it's a termination. Smalls roll above the large. Pull back to the green line right there. That's your HVA trade at 500, Phil. And it took you up to 28, almost a 30-point move. It's perfect. But that's your entry right there where it pulls back to that green line. Good job. Did you guys know that when you start going counter trend, you forget to trend trade? True story. You guys learn these counter trend trades and you start countering everything. It's fun to watch. I'll be back in about 5 minutes, guys. Stretch your legs if you need to. I'll be back. All right, my friends. Last hour, home stretch. Here we go. Pete, let's see what you did. Large chart didn't change. Odds favorable minimum. Clear path. First one in, paid at trouble. 3 divergences, didn't take the pullback. Plus it was between large triggers. Avoidable loss. Nicely done, Pete. Good chart read. Don't have that clear path, I choose to do nothing. And now we're seeing if they want to go back up. Pretty cool, right? Was that the S&P? That is the S&P. It's still odds favorable momentum. We'll just see if they get through that or not. Maybe they did all the down they wanted to do. Who knows? I don't know. I don't have to know. I just have to wait for my rules to be met. What would you guys like to talk about? My apologies. Sorry. I think that was my first cough today. Let's go through. Let's run the gauntlet. NASDAQ. Weak bottom. I'll be darned mid-bands holds when the large triggers don't go. We'll see what they do. Smalls are up. Large are down. We are coming from terminations. We'll see what happens. Name change. Look at that indecision. Crude oil telling you they don't know what they want to do. Victor, we took the same one. Exited as you saw price reversing. So Victor, can we be honest? You can't see price reversing on a 1 minute. It's a 1 minute bar. There could be 1,000 ticks in there. If you're looking for an uptick as an exit, just get paid at the area. The market continued down, so clearly price didn't reverse. It just fluctuated on that tiny little chart. But you did get to trouble, 100%. You reached your target. It's the perfect trend trade. It's the perfect exit, not because of a price reversing, but because you reached the large chart termination. Large chart defines targets. That was ideal, 100%. Great trade, Victor. But does that make sense? That's scary if you didn't see that, because how is rule number 1 met if you don't know where large chart trouble is? $10K. We saw this one a couple times, right? Odds favorable momentum, 3 triggers through. Pull back to the area, didn't take it. Pull back to the area, didn't take it. Pull back to the area, didn't take it. I'll take it now. And there it goes. Supposed to be at fib, made it to 1-to-1 on large chart. We call it a trend trade. Yeah, it's definitely a trend trade. Nice job, 10K. That's a good one. Do you see how the best entry was up here at the areas inside of triggers? You gave up a little bit, not a lot. Great trade. Nicely done. Nicely done. You guys make it look easy when you take these trend trades. Hey, Mark, check it out. Momentum path and entry. Wow, what a concept. It seems to work. Daniel 3, how are you doing? I know you're about 3 or 4 days into it. Are you starting to see it? Is it starting to make sense? Nothing but trouble, guys. That's a pretty good looking exit, isn't it? Did you guys know that was a 16 point per contract trade? That's pretty awesome. What's the S&P doing? Oh my gosh, the S&P is in nothing but trouble too. Which means triggers down. I do have room to trouble. There's my pullback to the area. Technically, I can go short again. I just need this bar to close below those triggers. And if it doesn't, it's not my trade. And if it does, I know exactly where I need to get paid. Let's see what it does. We've got 30 seconds to think about it. But market's already been to the termination condition. It has, but the triggers are still down. 20 seconds. Let's see what it does. Got to take a loser at some point today, right? Are they going to go without us? 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. That fits my rules. I'll put my stop loss in place, right? We'll take 3 off at the HVA since it has already reached its trouble spot, and then we'll put one more down right at the main. Maybe we'll take a hickey. I don't know. We haven't lost yet. I feel like we're due. But the rules were met. Does it make sense, everybody? Triggers are down. Room to trouble. Pull back to the area. This is the S&P, Victor. Close below the small triggers. Because it's the weak side of the triggers, I'll take my first profits. There we go. And then I'll go break even. And let's see if they go back and retest the zone. This is the S&P. Because it works on every chart, everything. Guys, we did it. We won. Again. It's getting old. That one was only worth 300. How lame is that? 300 and then break even. Boo. Boo. Stop overthinking things. Just let it be. Did anyone else see the old lady from Princess Bride when I say boo? That's what I was hoping for there. Triggers seem to be winning, but it's been a fight. I'm going to put both of these in the room again, because I'm fearful that some of you haven't latched onto it yet. The KISS plans. And you guys that are in here checking out the classroom, I like having you in here, guys. I think it's wonderful. You are invited to participate. Go sign up for the free demo. Get these indicators. Give it a go. I'll teach you how to read them. Guys, this KISS plan is designed to optimize your chances of success. Teach you to read the indicators. You're going to write your own plan, but until you can, give you very specific checklists for entry management, injury management. Take all the guesswork out for you guys. All you have to do is learn it. Miss Trina, today you made the decision to focus only on NASDAQ instead of bouncing between NASDAQ, Gold, and ES. Also, only trend trade. I have named my area and not looked at anything else. Much less stressful and has been a successful morning. Trina, I love that. Welcome to the team. You've got the bad influence at the house too. Wayne is like a ferret on Red Bull. So that's your trading influence. Great job. I only trade one market too. And guys, not what I do means that it's right, but I'm really good at reading indicators. I watch one market. And can I talk about why? I can, because it's my room. If I am watching the NASDAQ and I missed my entry, I'm like, oh shit, I got to go to crude oil. Oh, I missed that short. Ah, man, I missed that long, son of a gun. And guys, when you're bouncing between multiple markets, you realize that you're going to miss trades, that you're not present for the trade. You can't take the trade, and your brain will instantly try to make up for it. Well, since I didn't catch the perfect one, I better fabricate the less than perfect one to get me where I need to be. Momentum, clear path. No entry area, Kathy? Looks like it should have been about right there. Excuse me, I'm so sorry. Is there a small chart that goes with this? It's the NASDAQ. I can find it. Oh, it's just below. I'm sorry. I never look below. There you go. Sell a pullback at an area inside of triggers and make money. So, Kathy, correct me if I'm wrong. When you have strong triggers, when there's absolutely nothing in the way, you can pinpoint your entry with that level of precision and find a way to get paid? I love everything about it. And that's a $300 trade. It's nice to see you in here. You should be happy. You worked hard at this. And I love that you put this on every chart that you have. Aaron. Pretty cool, right? Learn the language and then live by it. Learn the language and then live by it. And Kathy, I don't think they made it all the way down, did they? They didn't. So great job getting paid. Whew. Zing! I'm going to say shorts are over. Crude oil, dead. Done. Gone. Crude oil dies at 11 a.m., guys. If you're trying to be a crude oil trader in the afternoon, you better off go and watch grass grow. NASDAQ, strong trending market, clear path, no areas inside of triggers. How could I possibly know what's going to create the bounce? I don't. So if I choose to enter, maybe I take a reversal bar. Has anyone identified a problem that they can't seem to work through with their trading? Maybe it's early entries, right? Maybe it's late entries. Yourself, Aaron. Aaron, you're fine. I can't stress this enough. You're right where you should be as a newer trader. There we go. That is the perfect picture for what new day traders do. They chase the money. And they chase it right off the edge of a cliff, right? It's the process. It's the process that takes us there. Guys, you got to focus on the process, not the outcome. The process, results will come. Focus on the process, not the target. This has to be true. Look at how many memes there are. Even Bruce Lee. A goal is not always meant to be reached. It often serves as something to aim at. Focus on the process. The result will take care of itself. Focus on the process. Focus on the process. This is a pretty recurring theme. Chuck Norris is all about the process. Chuck Norris waits for the market to come to him. Love me some Chuck Norris. I used to bartend in Deep Ellum, Dallas, and Chuck Norris would come in when they were shooting Walker, Texas Ranger. Really nice guy. All the momentum, termination condition, no reason to take the short, right? Pretty cool. It's that simple. Daniel 3, how we doing? Z Robot, you feeling it? Gene, how's your transition over to TradingView going? Are you still trying to make the two the same? I see a lot of that on people that are converting. Termination. Small triggers above large. Opens above the white bar. There it is, Phil. I think you're grabbing hold of this one. Now remember, Estefania, you are like clockwork, my dear. Odds favorable, room to trouble, jump the fudge in, get paid. Great job, Estefania. Momentum and path. Momentum and path. Find a way. Great job. There it goes. Couldn't go short. Odds favorable. 3 triggers from a strong bottom. What do you think? That's probably where the market's most likely to bounce if it's gonna, right? Stop has to go where the market shouldn't. Maybe use Fibonacci for targets, right? Let's just crank that up, see if it goes. Who knows? Reversal bar, we will reduce risk. Oh no! Oh no! Divergence on a 50-50 trade. Come get that stop. We broke a rule. Come get the stop. We broke a rule. Just gave it all back. Pete, everything's up. Nothing in the way. Jump in, jump out. You and Estefania are clearly in cahoots. We're still in. We won't be long. Guys, that divergence on the 50-50 trade is the biggest killer of the 50-50 trade. Let's see if waiting for a reversal bar would have been better. There's the reversal bar, but it's directly into a fib. And no matter what we were hoping, bad news, guys. We gave it all back by breaking rules. Dag nabbit. I'm on simulator. It's okay. What did we do wrong? Let me double check. Hold on. Let me see what I did wrong here. Did I make a mistake? Let me go into self-analysis mode. I did have 3 of 4 triggers. It was a strong bottom. It was strong triggers. It was strong triggers. No divergence on the small chart. That's what I did wrong. That's what I did wrong. I broke this rule, and it got me. And then just to add insult to injury, it went up anyway. And now I've got a revenge trade. Now I've got to take the wrong trade 17 times to make up for breaking my rules that one time. I promise you guys, lean on that KISS plan a little bit until you're consistent. It'll keep you out of a lot of losers. Good trading begets good trading. Yep, that's true. Do you guys know that people that blow out funding accounts don't blow them out over the course of 4 or 5 days? How long does it take to blow out a funding account? I'd say 10 minutes. I would say most funding accounts are lost inside of 10 to 15 minutes. And about 7 to 8 trades in the exact same range. I watch you guys trade all day long. Momentum and clear path. I was running up, just jumped in with momentum and path, and got out of trouble. Nicely done. My record is like 4 minutes. I've blown out an account in 4 minutes. I'm going to go counter, it lost. I'm going to go counter again, it lost. I'm going to triple contracts because this has to be the one that wins. Oh, I'm out. I'm not afraid to admit that. Guys, I've done everything stupid. Everything. That's awesome, Miss Kathy. Little chili dog action. When everything is screaming and there's nothing in the way, there you go. Find a way. When you see me trading badly, you have permission to temporarily disable my account. I won't do that for you, Phil. That would be trading advice. I'll tell you what. If you break your rules, I give you permission to walk away from the computer. There's your termination. There's your reversal. There's odds favorable momentum. There's no divergence. Only 2 triggers through. But that was your short. S&P is trying to catch up. We'll see if it does. Look at that. Excuse me. 2 triggers through. From a strong top. Odds favorable momentum. Can we get that 3rd trigger through? We'll see. There we go. 3rd trigger through. Divergence prints. I can't take it. You do that after you reach a loss limit. Closer. You close everything and revisit the next day. I like that, Estefania. So one of the things that I'll do, and John and I talk about this, is if I lose a couple trades in a row, I don't say, oh no, I'm doing something wrong. What am I doing? I look at my trades and I put my rules up against the trade. And I ask myself, am I following rules? And if the answer is yes, guys, I'm not doing anything wrong. Sometimes great trades don't work. And it's funny, my wife's even in tune with that. I told her she woke up and I'd already been trading, and I was like, I took 3 losses this morning right off the bat. And she goes, well, were they the right losses? Meaning, did you follow your rules? I was like, every one of them. Then she's like, don't sweat it. That's part of trading. My wife is so in tune with the vernacular of this classroom. She doesn't even trade. She knows the language. My wife's an amazing partner. I'm a very fortunate man. She tried to learn to trade for a little bit. And it was funny because my wife is brilliant. My wife is she's brilliant. I don't know how I got this lucky. And when she started learning to trade, she was absolutely floored. She goes, gosh, I know the rules. Why am I breaking them? And it was funny. I said, because you're looking at the money, not the trade. She goes, oh my gosh, I really am. So even the brilliant people do it. It's just a part of it. You got to work through that. The more mechanical, robotic you can be, the easier it is. She's a rule. My wife too. My wife has a surgical background, 20 years in cardiovascular OR. If you deviate from rules, people die. And she thought she would bring that into trading. And she did, until she started focusing on the money. And then it didn't do her any good at all. My wife's total type A, left brain, MBA. She's got more letters behind her name than people should. And she'll tell you it's hard to follow rules. That's everybody's challenge, guys. The patterns are easy. The patterns are effortless. It takes no time to learn how to enter the market. It'll take you more time to learn how to not enter the market. Your challenge will be to not take the wrong trades. And Trina, you said it. When you stop looking for all the trades, trading's been easy today, right? Victor, trading's been easy today. Your daughter just graduated from nursing school? That's awesome, Jeffrey. My wife being a nurse has been awesome. We've been traveling for the last 4 years. It's a great gig. It's a great job. I didn't know she was that smart when I met her. Didn't see that coming. All right, guys, what's next? No areas inside of triggers. Don't know if, when, or where the market's going to reverse. Still trying to figure out how an 80s rocker raised such good kids. Jeffrey, it's because we did everything wrong, man. We let our kids do it all wrong too. Make mistakes. We're the generation that didn't helicopter parent. It was fun back then. But if you've been to jail, you can't really tell your kids don't do things that'll throw you in jail. You can tell them it's a bad idea. Let me tell you about what happened when I got drunk in a field and set on fire, right? But you got to do it. They got to do it. They got to make those mistakes. And I think that our generation was more understanding when those mistakes were made. We didn't turn them into giant things. Look at that. Fibonacci to the tick. How awesome is that? To the tick. All right, guys, we've got about 20 minutes. And I'm certainly not afraid to talk until the very end. But I need something to talk about. Trina's like, I don't know if those are up or down. Hell. And Trina, even more so, I don't have anywhere to go down or up. That's a great sit on your hands kind of moment. Now, until they actually pinch and roll up, they are down. And that's one of the things, and you'll see it. Let's see if we can find an example of it. Where it'll look like those triggers are about to roll down, and then the market goes up and they don't, right? Or it looks like there's going to be a switch, and then the market decides to change direction mid-bar, and they don't. Can't really find another one. And this is one of those times, Trina, where if the market goes up, if this bar finishes in 5 minutes up here, these triggers will be up. If something happens and there's a huge sell-off and the market's down here in 5 minutes, they will have never rolled up. So one of the things I think we can do is we can say they are down until further notice. We won't know for sure for 5 minutes. Which means I'm only looking for short trades. Let's talk about endurance and following the plan. Seems like it's something I have to work up to. My first attempt lasted for 9 sessions, then derailed in 1 session. My second attempt lasted 23 sessions, then derailed. My third attempt is making it to 40 sessions. So, Phil, you're saying that your breakdown is happening later and later than it used to. Okay. So let's talk about what's changed. So Phil, one of the things that you did that put you in a position to be more successful longer is you only focused on the trend trade, right? You went, okay. So Phil, I'm going to tell you the other side of that. You're starting to add more trades. Despite your success with the trend trade, despite your 80% wins, despite your effortless profits, you're starting to add more trades. Why? Typically, that's where derailment comes, because now you're thinking about twice as much. You are going longer because when you only take one trade, Phil, you trust that trade. You believe in that trade. You know that trade wins more than it loses, and the losses don't throw you into a tailspin quite as much. If you're taking trades that you're not sure if they win more than they lose, the losses become personal. They're not a byproduct of a great plan. And the data from journaling helps. But it only helps, Phil, if you pay attention to it. And if you're finding overwhelming success with simplicity and then you try to complicate it, you are solely responsible if you crater in the near future. And it's this phenomenon that I call the 30-day stupid. And Phil, I don't know if you've ever heard this story. So in my previous life, I worked for a restaurant. I was a GM of a restaurant. And when I was an AGM, my job was to train new managers. So you guys are all my new managers. And Phil, I would give my new managers a checklist for daily routines. But I wouldn't just hand them a checklist and say, do it. We would talk about the whys as well. Why do we wait for strong triggers? Well, because it's hard to stop. Why do we have no terminations and all that? And what happened, Phil, is I would create an army of amazing managers right off the bat. They would never miss a beat. They would never lose money. They would never piss off my staff. And right around 30 days, so you're 40 in right now, 2 months. Right around 30 days, most people, for the first 30 days, they will say, this is why I'm doing so well. No guessing. At the end of 30 days, all of you say, I'm so freaking smart, the checklist is not why. Because we're all egomaniacs. Right around 30 days, we go from this to this. And suddenly, strong triggers aren't that big of a deal. And we start losing more. And suddenly, areas inside of triggers aren't that big of a deal. And we start losing more. And termination conditions, those can't hurt me. I'm kind of a badass. Have you met me? I've been doing great for 40 days. And that's what I call the 30-day stupid, Phil. When you forget why you're finding success and you start imposing your will on the market, you start looking for more, you start changing your plan and adjusting your rules without the practice that goes into it. So that's the endurance. Endurance comes from trust. The better you do, it just comes from trust. It's process. And the longer you do the same thing, the more you trust it. You know, if you date 75 women in 1 month and every one of them cheat on you, you don't trust women. But you date one and it's good, you learn to trust it. Trina, do you see what I mean? They're down until further notice. Pretty cool, right? That's where people get a little caught up, but it's down. Because if that happens, they stay down. And there wasn't a really good setup there. So, Phil, I like that. That's the psychological part of it. You have to believe in what you're doing. And if you don't, you'll continuously change it. Pete, odds favorable, nothing in the way. Jump in, get paid, and then you miss the trend trade on the way down. You're welcome, Phil. And I think talking through it is too. When I have a bad day, I talk to my wife. I tell my brother, dude, John, I effed it up 32 different ways today. And he'll do the same thing I do with you guys. Well, did you follow your rules? No, I didn't. All right. Well, what were you looking at? What pulled you out of your zone? And I'll do it. There it is again. Just perfect. Pete, all the momentum, nothing in the way. Let's make money. All the momentum, nothing in the way. Let's make money. Estefania, all the momentum, potential to break. Pull back to the area inside of triggers. Giddy up. Down it goes. I don't know why you entered here, but it worked out with all that momentum and the potential to break. Nicely done. Nicely done. Best entries up here, right, Estefania? You aimed for the first retracement, but that was over here. But you didn't make it. All right, just moving too fast. Looks like it was moving pretty quick. Or you being slow. That's okay, that happens. Well, Estefania, you're used to jumping in, right? You're not used to buying or selling a pullback in an area inside of triggers. which means you probably hit sell now instead of just waited. But that's okay. You're still doing it. You're taking advantages and turning them into money. There it is again. Pull back to the area inside of triggers. I'll be damned. Boaz, 3 for 3, killing it. Good job. All of you, good job. You know what's funny? And maybe not funny, haha. Is I don't think we've had one loser posted in the room today. Not one of you has taken a loss today. But I sure have seen a lot of winners. That's always weird to me. You posted a loser, Boaz? Did I miss it? Maybe I don't remember it. One. Oh, yep, you did. You did post your loser. And you got a good lesson on the mid-band as a termination. You did from yesterday? Right on. And I say that, guys. I think it's important. And Aaron, I've only seen 2 charts from you today. I've only seen 2 charts from you today. And Andy, you did. You're right. All right, guys. I stand corrected. I was trying to turn that into a lesson. Guys, you get better from the losers. Yeah, I screwed that one up, didn't I, Trina? You get better when you lose trades. I wish. My lungs won't let me smoke anything. I took a trade yesterday. So I trade the NASDAQ. And let me see if I can find an example of it. So for me, I typically wait for reversal bars on the NASDAQ. And I'll show you how patterns help very much. If my reversal bar, maybe you're not going to find an example of it. If I'm going to take a short trade and my reversal bar trades directly into a Fibonacci area, and man, it's just been flowing today. So this is a good example. If I'm looking for the short trade and my reversal bar closes into a fib, I won't take the trade because more often than not, they create a bounce. This is NASDAQ. For those of you trading the NASDAQ, that's my little stay out of trouble secret. Is that if the reversal bar to get me in is directly into an area, I don't do it. And it saves me more than it doesn't. And it's funny because yesterday I broke that rule and I lost instantly. And I had to take that loser and do the reassessment and say, okay, where did I go wrong? And that's what it was. And I think losers are great because you're less inclined to take them after you've taken them. Wacky tobacco, funny tobacco, you guys are the devil's lettuce, whatever you want to call it. The losers are a reminder of you know better, exactly. Or you're learning to know better, right, Estefania? Everything says down, nothing's in the way, jump in, jump out. Taking those base huts. Everything says down, nothing in the way, jump the fudge in, get out before it dies. I told you guys, once you learn momentum and path, you'll be floored at what you can pull off. You will be floored. You guys are getting all the good trades. Hope you leave some for me after class. Man, oh man. Good day today, guys. Good day today.